Hello guys, good day. Welcome to another video lecture, but this time, lecture on ACC 311 income taxation. So income taxation is under the taxation subject of your CPA board exam, together with business taxes, transfer taxes, and other types of taxes. So in this subject, we will be focusing income taxes, so meaning all income earned by all types of taxpayers, may it be individual, corporation, and other types of taxpayers. So in this specific video lecture, we will be discussing about the basic principles of taxation. So we would try to identify what is really taxation is all about, what is the importance of taxation, and what are the different objectives of taxation, and how does taxation affects our lives as an individual citizen of the country. So when we talk about taxation, taxation is the process or means by which the sovereign, through its lawmaking body, raises income to defray the necessary expenses of the government. Taxation, as the power of the state, is inherent in sovereignty. So again, taxation, it is a means on which the government raises revenue in order for the government to have something, to have a fund to be used in the day-to-day expenses of the government. And the thing that is being collected of the process called taxation is taxes. So taxation, it is the process, while the money collected from that process of taxation is what we call taxes. And taxes are being personified as the lifeblood of the government, and their prompt and certain availability are imperious need. A government cannot continue to exist and operate without financial means. So taxes is being compared into a blood, because obviously a human body cannot operate, cannot function well without the presence of blood. So it is being compared as taxes in the government, because obviously the government will be paralyzed without taxes, because we don't have, or the government would not have something to pay for the different needs that the government would require in order to make sure that it again satisfies its objectives to its people, to satisfy the promise of the government to its people. So taxation is indispensable and inevitable price for a civilized society. So without taxes, as what I've said earlier, the government would be paralyzed. So few of the different functions of the government that is again funded by the taxes of the different taxpayers is first, the public education. So, as we all know, the government is the one who pays all public school teachers. That is again providing quality education to the people in the public sector of education. Another is, it is also the government who is paying the military forces of military forces of the country, to make sure that there is peace, and the people, the citizens of the country are um, away from possible danger. And also, the government is the one who pays for the different infrastructures for the benefit of the people. So these are just few of the different projects or the different objectives of the government na will not be realized without the presence of taxes. So again, taxes are used by the government in order to make sure that the promises of the government to provide quality living to its people are satisfied. So the purpose of taxation is divided into two. So we have primary purpose and secondary purpose of taxation. So let's discuss first primary purpose of taxation. The main or the primary objective of taxation is really to raise revenue. The main objective why the government collects tax is really to collect revenue, because again, as what I have mentioned earlier, the government cannot do anything without revenue. And biggest contributor to that revenue is the taxes that it could collect from the taxpayers. So another, we also have the secondary objective of taxation. So first, to regulate inflation, economic and social stability, and social control. And the other one is to compensate the benefits provided by the government to the people. So by the way, taxation follows the doctrine of, or again, follows the ability to pay theory. So again, if um, the taxpayer is earning high, then that taxpayer would also be expecting higher tax compared with those taxpayers which their income is relatively low. So they could also expect lang for a lower taxes. Another, we have the inherent powers of the government. So we have three inherent powers of the government, and that already includes taxation power, or the power to tax, which is the subject matter of our subject ACC 311. But again, let us discuss first police power and eminent domain power. So first, we have police power. It is the power to make and implement laws for the general welfare. So when we talk about police power, again, it is the power of the government to make sure, it is the power of the government to implement different rules and regulations or laws that will assure the wellness of the general public. While eminent domain includes the power to take private property for public use with just compensation. So another power of the state is our eminent domain. So when we talk about eminent domain, it is the power of the government to take private properties for the use of the government or for the improvement of the functions of the government, but with just and equitable compensation. So the government is not allowed to take private properties without just and equitable compensation. But as to how much is just and equitable compensation, it is the court which will determine how much is just and equitable compensation. And the third inherent power of the government is again the taxation power, the power to enforce contribution. Again, the word is enforce. So the government is forcing the people to contribute money to raise government funds. It is an inherent power by which the sovereign, through its lawmaking body, raises revenue to defray the necessary expenses of the government. So, as what I have mentioned earlier, that taxation power is inherent in nature, meaning no one could hinder, no one could restrict the government from collecting taxes. Just like how the government um, is so powerful in implementing laws and regulation to make sure that its people are safe, and in taking private properties for public use. So we also have here principles or canons of a sound tax system. So we could say that the tax system for a particular country is sound or is good if these factors are present. So first, we have fiscal adequacy. So fiscal adequacy, enough or sufficient to use in meeting the government expenditures and other funds needs. So government budget balance, this is in consonance with the lifeblood theory. So again, when there is fiscal adequacy, that means your income or the revenues of the government is just equal to the expenses of the government. So we have budget deficit if the government revenues is less than government expenditures. We also have budget surplus if the government revenues is greater than government expenditures. But in most of the times, we have this budget deficit. So what will happen if there is budget deficit? So if there is budget deficit, that's the time where the government will make liabilities or will enter into liabilities from different financing institutions, may it be from the World Bank or from private institutions, in order to meet the difference between the expenditures and the revenues. So again, kung kulang ang revenues na nakolekta ni government, then that's the time where the government will create utang to make sure that the government expenditures are fully funded. Another is equality or theoretical justice. Equality or theoretical justice based on the taxpayer's ability to pay, and it should be progressive. So the thing that I have mentioned earlier, which is the ability to pay theory. So that means if you are earning higher, then therefore you also have the higher ability to pay. So therefore you could expect higher taxes also. And also, if your income is relatively low lang, then you could also expect that your taxes would also be lower. And then, letter C, administrative feasibility. So, again, administrative feasibility, it's the capability of being effectively enforced. Tax laws should not obstruct business growth and economic development. So, to ensure administrative feasibility, then the government should be able to effectively enforce all the statutes and all the tax rules presented in the tax code. So these are the three canons of a sound tax system. So absence of any of these three, that makes that the tax system for a particular country is not that good, is not that effective enough to fund the government. Now let's proceed with the inherent limitations of taxation. Although the government has an inherent power over taxation, but it has also certain limitations. So we have PENIT, five inherent limitations. So we could use PENIT as our mnemonics, no, for easier recall. PENIT stands for Public Purpose, Exemption of the Government, Non-Delegability of Taxing Power, International Committee, and territoriality. So let us first discuss public purpose. So public purpose does not only pertain to those purposes traditionally viewed as essentially government functions, but also includes those purposes designed to promote social justice. Broadened to cover uses which redound to the general's public interest. So again, taxation is only made for public purpose. So again, it is not collected to benefit few group of people only, or for those people in a certain level, but it should be collected to benefit everyone, to benefit the public. But the problem this time is, how can we identify public purpose? So it is the government, particularly the Congress, who will determine which are for public purpose and which are not. Because it is the Congress who will create tax laws. So tax laws emanates from the Congress. So this is a legislative prerogative, hence such power resides in Congress. However, it does not prevent the court from questioning the propriety of a statute on the ground that the law is not for public purpose. So um, there is safety that people can be assured na whatever is the projects presented by the Congress are really for public purpose, because there is someone who will make sure that all of these projects are for public purpose, and that is the court. So there is balance, although the power, or the power to determine which are for public purpose, relies on the Congress, but we have the court to check whether, or to validate whether those activities are really for public purpose. And then the second one is exemption of the government. So exemption of the government includes exemption of paying taxes of the different government entities, agencies, and instrumentalities. So the the logic behind that is, um, properties of the national government as well as those of the LGU are not subject to tax, because it will result in an absurd situation where the government is taking money from one pocket and putting it in another. So as we all know, the government also has different entities, agencies, and other instrumentalities. So also these are exempted in paying taxes. But again, that before an entity, agency, or government instrumentality will be exempted for taxation, there must be a law, there must be a statute that says so. Because, for example, we have government owned and controlled corporations. This might be owned by the government, but there are GOCCs which are subject to tax. So, again, when we talk about exemption, it should have there should be a law, there should be a statute that again backs it up before this entity, agency, or government instrumentality may be exempted from the government. But in general rule, government entities, agencies, and instrumentalities of the government is exempted from paying taxes. Another is non-delegability of taxing power. So the power to tax is exclusively vested in the legislative body. Matters that cannot be delegated first is the selection of property or transaction to be taxed, determination of purposes, rate of taxation, and rules of taxation. So again, take note that when the creation of tax laws starts, it always emanate with the lower chamber of the legislative body or in the Congress. Okay, it's it should start in the it should start in the legislative body, particularly in the House of Representatives. And then take note that it is we, the people, who delegated our power over them to represent our district or our province in that respective na Congress, then they are not also not allowed to redelegate the power that we have delegated over them. So therefore, in terms of different caucus or different sessions pertaining to the selection, determination of purposes, rate of taxation, and rules of taxation, they should be they should be present in order for their people or their constituents will be represented in that session, because if they will not be present, then they cannot delegate their power, they cannot let their secretary or they cannot let their representative to be there on their behalf. So that means if they are absent, then their constituents will not be represented in that session. Another is international committee. So the Philippines adopts the generally accepted principles of international law as part of the law of the land and adheres to the policy of peace, equality, justice, freedom, cooperation, and amity with all nations. So, international committee means the properties of other countries will not be subject to taxation under a specific country. Okay? So, for example, it's an extension of the government of US, then therefore it will not be taxed also here in the Philippines, just like the Philippine government extension in US, it that will not also be taxed under the US government. And lastly, we have territoriality. Power to tax is limited to the territorial jurisdiction of the state, except where privity of relationship exists within or between taxpayer and the state. So, for example, we have local taxes. Local taxes, one of the example of our local taxes is our real property tax. Real property tax, these are taxes paid on our real properties like land, house and lot, and etc. Okay. Real property taxes are to be paid on the local government units. So, for example, it will be paid on the city hall or on the respective municipalities. So, obviously, if your land belongs or if your land situates in Tagum City, then therefore you will be paying to City Hall of Tagum. And Davao City cannot um, cannot let that owner to pay sa Davao because obviously Davao has no Davao has no jurisdiction with that property since it's the Tagum City, because since it's in Tagum City na situate ang property, then therefore the real property tax will also be paid kung asa ang may jurisdiction over it. Okay? And vice versa. Yung properties naman sa Davao obviously cannot be taxed by Tagum City. Tagum City government cannot um what's this? What's the term? Tagum City government cannot push people from Davao to pay their real property taxes sa Davao kay they don't have jurisdiction man over those types of properties. Another, we have doctrines of taxation. So when we talk about doctrines, these are the concepts that we follow in taxation. So first, guys, is construction and interpretation of tax laws. Any claim of taxation or tax exemption should be strictly construed against the taxpayer and liberally in favor for the government. So when we talk about tax exemption, so that means exemption. If there is tax exemption, that means there is a reduction in taxable income and eventually a reduction in tax due. So if there is issues relating to tax exemption, then that should be construed strictly against the taxpayer, always in favor of the government. So again, always in favor of the government. A tax can't be imposed unless it is supported by clear and express language of a statute. A tax statute is strictly construed against the government and liberally in favor of the taxpayer. Baliktad naman, a tax statute is strictly construed against the government and liberally in favor of the taxpayer. So again, that means the government cannot just simply collect taxes if the government has no legal basis, has no legal statute, tax law that is in the tax code. So if there's nothing that backs up the government from collecting taxes, then therefore that should be construed in favor of the taxpayer. Without without legal basis of the collection of tax, then therefore the taxpayer will be free. In lieu of all taxes or in lieu of all taxes clause only applies to national taxes and does not apply to local taxes. Another doctrine of taxation is prospectivity of tax laws. Tax laws are prospective in application, except when the language of the statute clearly demands it shall have retroactive effect. So, retroactive application of laws may also be allowed if it will not deny due process. So that means there is prospectivity in the application of tax laws. For example, in year 2018, it was the first year of the effectivity of the train law. January 1, 2018 is the first day of effectivity of your train law. So that means train law will only take effect from January 1 of 2018 onwards. Okay? If there are tax disputes regarding income taxes and other taxes prior to January 1 of 2018, then therefore the old existing law will be followed. The NIRC 1997 or whatever is in the tax code will be applied. It will not apply train law because again, application of tax laws is prospective. It will only be applied effectively when it was again effective. So it cannot be used retroactively. Except when there are clear demands. Except when it is clearly stated that dispute will be following a that dispute will be following a retroactive application of tax laws. But in general rule, prospectivity of tax laws will be followed. Application of new tax laws will be prospective. Another, number three, imprescriptability of taxes. right to assess and collect taxes are imprescriptible, meaning without limitation. Exception. But general rule, no limitation. But there are exceptions. What are the exceptions? When the laws provide for statute of limitations. First, assessment of internal revenue taxes is only within 3 years from the last day prescribed by law for filing the return. Okay, that's for the assessment. In case of fraud, at any time within 10 years from the discovery of fraud. In cases of fraud, at any time within 10 years from the discovery of fraud. So meaning, if the government weren't able to file cases and the 10 years has lapsed already, then therefore the taxpayer or the delinquent taxpayer will now be free. For LGUs, 5 years prescriptive period for assessment and collection. There should only be 5 years na period for the assessment and collection. So if the government, local government unit, so local government unit includes the province, the municipality, and the barangays. If they have implemented local taxes with their constituents and they weren't able to assess and collect that for a period of 5 years, then therefore they will no longer, or the taxes that they will no longer be collect they can no longer collect that kay mag-expire naman. Another is double taxation. Double taxation is an act of sovereign by taxing twice for the same purpose in the same year upon the same property or activity of the same person. Again, double taxation generally is not allowed. Direct double taxation, because we have two types of double taxation, guys. But again, take note of the definition of double taxation: taxing twice for the same purpose, same year, same property, and same person. We have two types of double taxation. We have direct double taxation and indirect double taxation. So when we talk about direct double taxation, it's an objectionable kind of double taxation in its prohibited sense, since it violates the Equal Protection Clause. So example, City of Baguio versus De Leon. So elements where there is direct double taxation, the same property or subject matter taxed twice when it should be taxed only once. Both taxes levied for the same purpose and imposed by the same taxing authority within the same jurisdiction during the same taxing period and covering the same kind of character of taxes. For example, real property taxes, as since we were talking about real property taxes earlier. So since according to the tax code, it is the local government who has jurisdiction over ano jurisdiction over the payment of local taxes. So let us say your municipality is has already collected taxes, has already collected real property taxes. And then here comes BIR. BIR would want to collect again, would like to collect again real property taxes of that the same property. So that means that is not allowed. Okay? That is not allowed. Direct double taxation is not allowed. What is allowed is yung indirect double taxation nato. This is what is allowed. All cases where there is burden of two or more pecuniary impositions, usually allowed as long as there is no violation of the Equal Protection and Uniformity Clause. Example, tax upon corporation for its property and upon its shareholders for their shares. Tax upon the same property imposed by two different states. For example, of indirect double taxation is your income, si corporate income is subject to tax, and when the corporation will be distributing share dividends, not share dividends but cash dividends, or dividends for short, to its shareholders, that dividends will also be subjected to tax. So that means the income is taxed twice. But again, with different it's of different na nature. Una, tax ni corporation as a juridical entity, and the second one is tax ni shareholder as an individual. So another type of double taxation is either international double taxation. It's imposition of comparable taxes in two or more states on the same taxpayer in respect to the same subject matter for identical periods. So to eliminate double taxation, states may enter into a tax treaty. So when we talk about tax treaty, it is, tax treaty, it is an understanding between two countries. It is an agreement between two countries specifying specifying their wants. Now, for example, if this would happen to their citizens in the Philippines, then therefore the Philippine government will not tax them. So, if the same activity will happen sa mga Filipino na mga citizens sa US, then therefore US will not also collect taxes. So that means an agreement between two nations. And local double taxation happens when LGU imposes a tax that is already imposed by national government or by another LGU that has territorial jurisdiction over such LGU. Yung sinabi ko kanina na for example, nasa Tagum ang imuhang property, local tax. So therefore, you need to pay that to City of Tagum. Pero if the City of Davao will compel you to pay that, then that means local double taxation na yun. Another topic in basic principle is the escape from taxation. So from the word itself, escape, it's staying away from taxation. So we have 5 ways to escape from tax. First is shifting of tax burden. So the transfer of burden of tax by the original payer or the one on whom the tax was assessed to another. But again, only indirect taxes can be shifted. So, what are indirect taxes? Because we have two types of taxes, direct taxes and indirect taxes. So, when we talk about direct taxes are those taxes that can only be paid by the ones who was assessed. So, dili niya pwede i-transfer. Pero ang indirect taxes are those taxes na pwede i-transfer, pwede siya i-assess kay someone pero somebody will pay for that. So, mo na ang indirect taxes. So, later on, we will identify the difference more ni direct and indirect taxes with their respective examples. So, we have 3 kinds of shifting: forward, backward, and onward. So, when we talk about forward shifting, burden is transferred from factors of production through the factors of distribution until it finally settles on the ultimate consumer. Okay, so that means taxes will be included as part of the selling price or as part of the cost. So that is forward shifting. Pero si backward naman, burden is transferred from the consumer through factors of distribution to the factors of production. And lastly, onward, when tax is shifted 2 or more times backward or forward. So example, very good example of tax shifting is shifting of your VAT. Ultimately, according to the tax code, it is the seller who is responsible on paying VAT. Pero what your seller does is they include it as part of the selling price. So therefore, ultimately, it's the buyer who pays the value added tax. Another is tax avoidance. Tax avoidance or tax minimization is the other term. It uses legally permissible means in reducing or avoiding payment of taxes. So tax avoidance is a tax savings device when the means sanctioned by law must be used in good faith and at arm's length. So example, availing or exhausting all deductions allowed by law or refraining from engaging in activities subject to tax. So again, tax avoidance, it is the legal way of escaping tax. It is using the tax laws on your side to reduce your taxable income and eventually your tax due. So before, ang very basic example of this tax avoidance, although it is no longer applicable in the train law, just to have a simple understanding or application of tax avoidance is before in the NIRC 1997, before the application and effectivity of train law, every taxpayer, particularly si husband, will be given an exemption of 25,000 per child for a maximum of 4 children. So that means you will be having more deductions, tax deductions, if you have at least exhausted 4 children. So kung isa lang yung child mo, that means 25,000 lang ang deduction nimo. So that means you have higher taxable income. Pero if you have 4 children, then higher ang deduction nimo, then lesser ang imuhang taxable income. So that is an example of tax avoidance. But again, that's no longer applicable in the train law. Another is tax evasion, sometimes referred to as tax dodging. It's the illegal means in escaping taxation. It connotes fraud and subjects the taxpayer to civil and criminal liabilities. A scheme made of those lawful means. So again, tax evasion is the illegal way of escaping taxes. For example, it is fraudulently increasing your expenses, fraudulently decreasing your sales, or improperly declaring your tax due. And what's worst is really the non-payment of tax dues. So these are punishable by the law. Another is the doctrine of equitable recoupment. This doctrine states that a tax claim for refund which is prevented by prescription may be allowed to be used as payment for unsettled tax liabilities if both taxes arise from the same transaction in which overpayment is made and underpayment is due. For example, for a specific taxable year, you have a tax due of 150,000, but erroneously your tax accountant has paid 200,000 over your tax due of 150, so that means you have an overpayment of 50,000. So that overpayment of 50,000 may be applied to your tax liabilities in the coming years. So meaning you can set off your tax refund or tax claim, or sometimes we call that as tax credit to your future tax liabilities. But what is prohibited, guys, is set off. There can be no offsetting of taxes against the claims that the taxpayer may have against the government. What is not allowed is to set off whatever the liability of the government to the taxpayer. So, for example, there is a corporate taxpayer, and currently the government agency has an outstanding liability, may it be, for example, for supplies or for whatever na liability that may come from. So whatever liability of the government for a particular taxpayer cannot be used as payment or cannot be compensated sa liability ni taxpayer. Tax liability of a taxpayer can only be extinguished upon payment by the taxpayer alone, or by tax refund if there is any. When the obligation to pay taxes, and the taxpayer's claim against the government are both overdue, demandable, and fully liquidated. Compensation shall take place by operation of law. Now let's proceed this time with the characteristics of taxes. So again, as what I have said earlier, taxes, this is the money that's being collected by the government. Okay, what are their characteristics? First, it's a forced charge. From the term itself, forced, meaning it is not voluntary. So no taxpayer again would say, "Oh, I have an income, BIR, I would like to pay it a portion of it to you." But it's always this case. I have an income, the rule requires me to pay, then therefore I will pay it. There is no voluntary payment as part of our earnings or income, but it's the other way around. It's really, since I am obligated, then therefore I will pay. There's no such thing as, oh, I have an income, so therefore I will pay, I will give, and I will contribute it to the government. There's no such thing like that. Okay. Letter B, generally payable in money. Your tax liability can only be extinguished upon payment of money. For example, you are a banana grower or whatsoever. You are related into agriculture. Your products is into agriculture, for example, and then you have a liability, for example, of 50,000 income tax. You cannot pay sagging. You cannot pay um, other agricultural products in lieu for your tax liability. Your tax liability can only be extinguished upon payment of tax. You cannot pay isda if ever you have excessive isda. You are, your business is into isdaan and then and the likes. You can only pay it into money. Letter C, exclusively levied by the legislative body. Levied by the legislative body. Taxes are levied by the legislative body. Who taxes the taxpayer? Who creates taxes? It's the legislative body. Particularly, it's the House of Representatives that creates taxes. Tax laws, sorry. Okay? Exclusively levied by the legislative body, particularly by the Congress. Letter D, assessed in accordance with some reasonable rule of apportionment. So, this is subject to apportionment. As what I have said earlier, if your income is high, then therefore, relatively, your tax due would also be high compared with the others. Imposed by the state within its jurisdiction and levied for public purpose. So, taxes will only be used for public purpose. As what I have mentioned earlier, it is the Congress who will identify what are the activities can be considered or can be tagged as for public purpose. Another, guys, that's distinguished tax from other fees. Tax from other fees. Imposition other than tax. So we have toll. Toll charge for the cost and maintenance of the property used. So when we talk about toll, it's a fee for something you have used. Okay? For example, this is common sa toll roads. Mogamit ka, you need, you'll use a private road as a shortcut, for example. This is common in NLEX and other types of expressways. So toll can be collected both by the government and by the private sector. But taxes can only be collected by the government. No one is allowed na private people to collect taxes. Unlike toll na both sector, public and private, pwede mag-collect ng toll. Another is penalty, punishment for the commission of a crime. Penalty. So common, for example, penalty is non-payment, for example, of your liability on time. So if you will not be paying your liability on time, there is a penalty, for example, of 20% per annum. So that means when we talk about penalty, there is something that you did not do. There is a fault on your part. But sa tax, regardless if you have fault or not, you are really required to pay tax because tax is enforced. Unlike a penalty, you cannot pay penalty if you followed the rules and regulation or the agreement. You will pay penalty because as a punishment of committing something, which is again not in accordance with the agreement. Another is compromise penalty, amount collected in lieu of criminal prosecution in cases of tax violation. So, compromise penalty is not a tax. Okay? Compromise penalty is in lieu of criminal prosecution. Now, instead of you will be criminally prosecuted of non-paying of correct taxes, then magbayad ka na lang ng compromise penalty para hindi ka ma-prosecute. Another is special assessment, levied on land based entirely on the benefit accruing thereon as a result of improvements or public works undertaken by the government within the vicinity. So again, when there is government na mga infrastructures or government projects, then in one way or another, if your land is adjacent or within that development made by the government, then indirectly your property will also indirectly benefit because the value of your property before the development made by the government from that area would be different from before. So obviously, since there's a development already made by the government, then probably the selling price of your property there will be higher since there's development already. So therefore, there is a special assessment that can be collected from land. But tax is again directly you don't have benefit over something. the government really pushes you to pay. Okay, if you have an income, if you don't belong to the marginalized sector, then you need to pay income tax to the government. Another is license or fee, regulatory imposition in the exercise of the police power. Example of license or fee is license to operate a business and etc. Margin fee, exaction designed to stabilize the currency. Debt, the sum of money due upon contract or one which is evidenced by judgment. Debt, ito, very, very common. Debt is payable in so many ways. So you can extinguish your debt by paying cash, by paying in kind, kung nakay saging, nakay isda, or whatsoever nga pwede nimo ibayad, kung musugot lang si creditor, then you could pay your liability using those commodities. You can also use your service. So, pwede ka manilihig, pwede ka manghilot para mawala ang imong utang, and etc. Pero taxes, again, it can only be paid through money. And also si debt, guys, debt can be offsetted. No? Pwede ma-offset si debt. For example, ang imong giutangan, example, yung creditor, your creditor is also your debtor. So meaning you are creditor and debtor of each other. So meaning pwede ra nga dili na mo magbayad to each other. You can no longer pay to each other. No? You can set off your liabilities. But taxes cannot be offset. You cannot offset or compensate taxes. Subsidy, a legislative grant of money in aid of a private enterprise deemed to promote public welfare. So subsidy, this is usually a grant given by the government. Custom duties and fees, these are duties charged upon commodities on their being transported into or exported from the country. So, any products that will be exported or will be imported from or to other countries will be subjected to custom duties or fees. Okay? And the agency that is the jurisdiction over custom duties and fees is the Bureau of ano Internal Revenue man si kuan, Internal Revenue man si BIR. So Bureau of Customs, si custom duties and fees. Impost, in general sense, it signifies any tax, tribute, or duty. In limited sense, it means a duty on imported goods and merchandise. So impost, this is, again, seems like custom duties for imported products. Tithe, contribution given to a church or a sect. That's obviously different from a tax. And lastly, guys, we have the last one is for a while that is that's tribute. Tribute is imposed by a monarch. So obviously this is not applicable in our country because we are not a monarchy. We are not under a monarchy. Okay, this time let's proceed with the classification of taxes. So we have different types of classification. We have A, B, C, D, E, F classification of taxes. So first we have as to subject matter. So we have four: personal tax, property tax, excise tax, and custom duty. So personal tax, this is imposed upon persons of certain class with fixed amount. Okay, as to subject matter, example is the community tax or poll tax. So in short, ang cedula. Cedula is the um, common term for personal tax. And then property tax, again, properties tax on properties. So real properties, land, house, and the likes. Excise tax imposed on the exercise of privilege. So what is taxed here is not income, but it's the exercise of privilege. So I mean, again, what is taxed here is the exercise of privilege. So privilege of earning an income. So that's why your tax is being your income is being taxed. Donation, and estate. So the power or the privilege of transferring property from one owner to another. So through donor's tax and estate tax. So donor's tax and estate tax will be discussed in your next tax subject. So that's under transfer taxes. Another custom duties charged upon the commodities being imported into or exported from a country. Another is classification of taxes as to burden. So una, direct and indirect tax. So when we talk about direct, both incidence or liability for the payment of tax as well as the impact of burden of the tax falls on the same person. So that means whoever is assessed will also be the one who will pay. Okay, for example, income tax. So let's say you are earning an income. So if you are earning an income, then therefore you will be assessed an income tax. And at the same time, you will also be the one who will pay. You cannot shift that income tax from taxpayer A to taxpayer B. That is not allowed. So that is direct tax, meaning you are assessed. At the same time, you will also bear the burden of paying that assessment or paying that tax due. See, indirect tax, guys, this is what can be shifted, no? Originally from someone shifted to another. The incidence or liability for the payment of tax falls of one person, but the impact or burden of the tax falls on other person. So as what I've said earlier, very good example of indirect tax is VAT or value added tax. So let's say VAT on commodities. So VAT is 12%. So according to the law, originally, it is the seller who will pay the 12%. But what does your seller do? They include the 12% VAT on the selling price. So that is why if you shop, you try to look at the receipts, no, given to you that already includes the 12% VAT. So that means eventually you as the buyer will now pay the tax. So there is shifting of tax payment originally from the seller to the buyer. So that is as to burden. Another is we have as to purpose. So general tax levied for general or ordinary purpose of the government. So general tax levied for the general or ordinary purpose of the government. So ito yung ano guys, collection of taxes because the government really requires these types of tax to fund the government. Pero the government also collects special taxes not because it will be required for the purpose of the satisfying the projects of the government, but it is taxed for a specific special purpose. So for example, there is higher sin tax for example. There is higher tax on there is higher tax on liquor or on cigarette. Okay, there is higher. So the purpose why the government collects taxes from those commodities or those goods, it's not because 100% for for the use of for the use as a source of fun, but it is also to make sure that there will now be fewer people to buy these sinful products because again if the government will tolerate selling of these types of products, then it might bring danger to the health of the people. So murag ano siya ba, regulation, it's a sort of regulation. Another is as to measure of application. So you have specific tax and ad valorem tax. So specific tax imposes a specific sum by head or number or by sum, standard or weight of measurement. For example, there is a specific amount of money. So for example, ano siya, and every this is common sa cigarettes. So let us say there is 15 pesos tax in every pack of cigarette. So therefore, if there is 10 packs of cigarette, for example, ano lang, example, I'm hypothetical example, 15 pesos per pack. So therefore, if there are 10 items or 10 pieces, 10 packs of cigarette, then therefore the tax will be 150. So you just simply multiply the number of packs or pieces times the specific amount per per piece. So if there's 10 pieces of cigarette, then therefore the tax will be 150. Pero si ad valorem, guys, it's the tax upon the value of the article or thing subject to taxation. Okay? There is subject to taxation. For example, VAT, 12% regardless of the value of sales. So meaning, um, your sales may be high or low, but your VAT will remain as 12%. So meaning there is no exact or specific value, but it's 12%. Okay? So it will be bigger kung mas dako ang sales. Mas gamay siya kung mas gamay ang sales. So that is ad valorem tax. Another is as to taxing authority, national tax and local tax. National tax levied by the national government. Example, income tax, business taxes, and transfer taxes. Local taxes are imposed by the local government. Local government, as what I have mentioned earlier, it includes barangay, city hall, or city government, si municipalities, and the provincial government. Example are poll tax and real property taxes. And then taxes as to rate, we also have three, guys: progressive, regressive, and proportionate. However, there are only two applicable in the Philippines. Only si progressive and proportionate lang ang applicable sa Philippines. Regressive is not applicable in the Philippines because again, it violates the ability to pay theory, no? So later, we will identify nga nung ni-violate siya kay regressive, ni-violate siya kay ability to pay theory. So first, progressive tax, rate or amount of tax increases as the amount of income increases. Example, normal, tabular, or schedular tax of 5% to 32%. But by the way, 5% to 32% this is ano pa, from the older tax law. Na-change na ito under train law. But what is being meant in progressive tax is that the tax rate that will be used to compute your tax due increases the moment your income also increases. So for example, if your tax or your taxable income is 100,000 lang, then therefore, for example, you will only be paying you will only be taxed by, for example, 5%. Pero if your income tax or your taxable income tends to go higher, for example, from 100 to let's say 1 million, then therefore, bigger na pud na rate ang gamiton to compute for your tax. Si regressive is yung sinabi ko kanina na not applicable in the Philippines because it's baliktad ni progressive. Si regressive, the moment your income increases, your tax rate decreases. So that means if your income is higher, you will be paying lower taxes. If your income is low, you will be paying higher taxes. So that violates the ability to pay theory. So that is why that is not applied in the Philippines. And the last one is proportionate tax. So based on fixed proportion or rate of the value of the property assessed. So this is also the same with ad valorem tax earlier. So regardless of the basis, the tax rate will be the same. For example, VAT 12% or capital gains tax of 6%. Okay? So that is an example of proportionate tax. Regardless of the basis, your tax rate will remain the same. So that those are the differences of different tax as to rate. Okay, I think this is the last slide. Income and income taxes. So income tax, it's a tax on yearly profits from property, professions, trade, or offices. Again, income tax because we have different types of taxes. So income tax is a tax on all yearly profits arising from property, profession, trade, or offices. So income tax only revolves with the income from property, from profession, from business or trade, or your office for or practice of your profession. So that is the source of your income tax. So types of let's just move directly with the types of Philippine income taxes, guys. So we have compensation income, professional income, business income, passive income, and capital gains. So compensation income, this includes your income from an employee-employer relationship. Professional income, this is your income in the practice of profession. For example, if you are an accountant, you will be engaging a firm, then all your income from practicing your profession as an accountant will be considered as professional income. And business income, so si business income, this is if you're a negosyante, if you are um what's this? If you are self-employed, or pwede combination at the same time, you are working at the same time you also have a business. Okay, that's combination of business income and compensation income. Another is passive income, guys, income in which the taxpayer merely waits for the amount to come in. So nganong gitawag siya, bakit tinawag siyang passive income? Because you don't need to have an active participation for you to earn an income over that. So regardless if you don't have active participation, you will still earn an income. So example of a passive income is interest from your bank deposits. So obviously, you don't have physical or active participation in order for you to earn income, interest income from your bank deposits. So as long as you have an income, as long as you have deposits from your bank, then regardless if you will go to work or not, that bank deposit of yours will still earn an income. Unlike with these uh, three previous na mga income, compensation, professional, business, these are all considered as active income. Why? Because you need to actively participate over compensation. You cannot be compensated if you will not be working. You cannot be you will not be earning a retainer's fee if you will not render service. If you will not create any professional services towards your client, you cannot earn professional income. And then, if you will not open your business, you cannot obviously earn income as well. So that is why these three, one, two, three, compensation income, professional income, business income are all considered as active income. And then passive income, guys, don't worry because in the next discussions, we will be focusing our discussion also with passive income. What are the different types of passive income? And lastly, guys, we have your capital gains. So capital gains, this is this is an income from disposal of your capital properties or capital assets, because later on we will also discuss, I think it's on chapter 8, dealing with disposal of properties, because we have two types of properties: ordinary property and capital properties, ordinary assets and capital assets. So ordinary assets are those assets which are related to your trade. And then, capital properties or capital assets, those assets which are not related to trade. So, kung magbenta ka ng capital assets, then that will be subjected to capital gains. Pero pag magbenta ka ng ordinary assets, that will be subjected to ordinary income. And the manner as to how are we going to compute for that income, and eventually income tax, taxable income and tax due, that will be discussed in the next chapter. So that would be the entire discussion of our basic principles in taxation. So if you have um, clarifications, and if you would like to have more and supplemental readings about the topic, you may refer it to the references of Baliada, Valencia, and Ampongan. And obviously, a lot of different resources in the internet. So I think that's it for this video lecture, and see you on our next session. See you and God bless.